Good morning, everybody. So, today I wanted to talk to you about the market because I think a lot of people are concerned with the interest rates that it is not a good time to buy. And so, here's my case for Atlanta real estate, and I'm going to show you the historical market and just talk about some projections. And you can use this for planning. Should you stay in the house you're in? Should do something else with your money? Whatever it is you want to explore, this is a great tool in my Gretchen talk for doing that. So you can see over 10 years what our historical median growth has been. And in 2010, we started at $130,000. That was our median home price in Atlanta, which is now $390,000 in currently in 2023. I broke it down into two periods. So from 2010 to 2015, it went up by 50%. And then from 2016 to 2022, it went up another 58%. And that's basically an average growth of 10% a year. So, as all markets go, there have been ups and downs. We were coming out of the housing bubble around 2010 and 2011. We were still dealing with that. And then you start to see the market go up and things getting tighter around 2017, 2018, and then here comes the pandemic. So can I guarantee that we're going to have these kind of growth rates for the rest of our lives in Atlanta? That I can't. But what I can tell you is that the Atlanta Regional Commission is projecting that we will have a growth by the year 2050 of about the size of metropolitan Denver moving to our city. So, where are all these people going to live? I mean, so it makes a good case that this growth is likely going to continue. And with these 7% rates, we are still seeing a lot of activity. It hasn't really slowed down. It definitely has bumped people out of the market. However, if you're waiting for those rates to come back down to 5%, just know that you're going to be in a more competitive market because you're not the only one that's sitting there doing that. So I'm going to show you the difference between a 5 and a 7% rate, because 5% seems to be the number that everybody seems to think that we're heading towards by the end of the year. Of course, there's no guarantees, but this is from several lenders that I've talked with, and also one of the larger institutional investors in the United States who I've talked to. So let's look at this. In 2010, you bought a home, a median average price in Atlanta was $130,000. By 2015, you were looking at $195,000, and now we are at $390,000 currently. And one of the things I've always loved about Atlanta is our affordable housing, but I think we're just really moving out of that beautiful period of our history as everybody is moving here. So, I wanted to show you next some projections that I did, which show a $400,000 home that has been financed with 20% down, and I've used a 6% growth rate. And you can see down in the bottom here where it's gain, what each year at the end of each year the increase in value is for that home. So over 10 years, if you held it that long, you would be looking at $79,000 in profit. 6% is not a bad rate of growth. And, for me personally, I would rather own something tangible like a house than some paper in the stock market where I'm not in charge of the market and I'm not in charge of the company. At least with the house, I'm in charge of the house, right? So there's that. And all of the money that I put into it is, sticks and bricks and things you can touch and take care of and all of that good stuff. You can improve it. You can do so much with your real estate. You're not doing much with that stock except it's sitting there. So if you're just somebody who would rather have something that sits there that you don't have to deal with, that may be your best bet. So the next chart is that same house, and I grew it at 10%, which has been our 10-year average growth. And over 10 years, that house has increased $180,000 in value, which I know we all love that number, right? What would I do with this number? I would look at my investment. This is how I've done it. And I said, okay, I'm going to probably land somewhere between that 6 and that 10% in growth. Plug the value of my house in at the beginning and just look at it and go, okay, how long do I want to live in this house? And, this is about what I think I'm going to take. So say it's 5 years, and it's a $400,000 house, I'm going to be at $60 to $112,000. That's pretty decent. And then, what do I want to do at that point? I'm getting to be older. Maybe I want to retire somewhere. I don't know. So it's just a good planning tool for that. But let's talk a little bit about the financing. So this home financed at 5%, the mortgage and interest only is 1717, I says per year, per month. And at 7%, it's 2127 is your monthly payment, or about $4,900 more in interest over a period of the year. So that doesn't make a very good case against the potential gains that you're looking at. Like, you could take $5,000 off of any of these numbers, right, a year, and you would still be pretty happy with the gains that you're getting out of those. So just remember, we marry the house and we date the rate, and rates change. There's a lot of people that are doing buy downs right now, things like that. So if you want to work with this schedule because you're trying to do some financial planning, just let me know. I will send it to you. If you would like me to do a market valuation for you at this point because you're doing some planning, I'm happy to do that for you too. Just let me know if you have any questions about anything with your real estate investment. I am here for it. All right. Thank you.